2016 has a lot to say on taxes. It lays down a roadmap for eliminating deductions, takes a baby step towards the 25% corporate tax rate, creates a patent box regime, defers POEM, confers GAR for next year, levies a new tax on online ad revenue earned by non-residents, makes crorepattis and big dividend income earners pay more tax, introduces a new 0.5% cess on services, makes cars, jewelry, expensive clothes, tobacco products, listed stock options and coal more expensive, and devises two new schemes, both to unearth black money and settle tax disputes. To get into the budget 2016 tax fine print, I have with me a panel of tax experts, Rohan, Shah, Parikh and Pranav Sayta. Gentlemen, to all three of you, a warm welcome. Pranav, we were expecting a roadmap for deductions to go away and a lower corporate tax rate, even if it was just by 1%, moving towards the 25% statutory rate. We did get a roadmap of sorts, but we didn't quite get that lower corporate tax rate. We got a baby step towards that, really, saying new manufacturing units can avail of 25%, but no deductions whatsoever, and a 29% rate for smaller industry. What do you make of that step? Because that was this budget was supposed to set the ball rolling in that policy direction.
Right. So I think they have made a very small beginning. I would feel that given the fiscal room available to the finance minister, I do not think he had more room for giving a tax deduction or a low tax rate in this year itself. Also, one has to recognize that if we want the phasing out of the deductions and exemptions to happen gradually and give time to industry and business to deal with a situation of phasing out of exemptions, then to expect a lower tax rate in this year while the exemptions get phased out only later on is also not a very fair proposition.
But can I interrupt here? He's also introduced two new exemptions, or a few more, right?
Absolutely.
For startups, he's introduced one. He's introduced exemptions for low-cost housing, and he's introduced a patent box regime, a 10% tax on the income on patents. Now, I'm just curious. On the one hand, you say policy-wise, I want to get rid of all exemptions. On the other hand, you're introducing more exemptions. What does this tell you?
So I think conceptually there's some confusion here. If we really do want to remove all exemptions and holidays and stick to a level playing field, a lower corporate tax rate, then that message isn't coming out as clearly from this budget as one would have expected. But having said that, I think what the finance minister is doing anyways is exemptions are going from 2020.
Okay.
Till then, you please live with this.
Would you agree, is the messaging on this clear, Bobby, Rohan? What do you think of, should we have made firmer steps towards this cleaning up of the corporate tax regime?
No, I think that I'm actually quite okay with what's happened, in as much as, I think there's a very clear roadmap for, it's a roadmap meaning that some things are going away in 17 and the rest will go away in 2020.
And some new deductions and exemptions are coming on, right?
My sense is that, in any situation, the governments will always have something that they want to favor and something that they want to promote, and so there will be some of that stuff which will come in, but the big picture stuff, I think it's getting clearer, and the 25% will follow.
Okay.
Again, I think the path is clear, and also I don't think the fact that you have a lower rate or a more benign rate is inconsistent with your supporting what you want to support through exemptions, and that need is going to evolve. So just because we're going to 25 doesn't mean that there will never be any exemptions. World over there are lower rates and there are still incentives. We have to understand.
So just fewer incentives.
Yeah.
Okay.
So I think wherever there is a patent box regime, for example, they still have lower tax rate. I don't think they are inconsistent.
Fair enough. So you're saying that this is the right step towards that simplification process. We have it.
What I would have hoped, however, Menaka, is very clearly that he should have said when the tax rate becomes 25%, like he has said when the exemption goes, and probably also said include surcharges and cess. Because if we say the effective tax rate corporates or Business India is paying is 24-point-something%, then that's including surcharge and cess, I believe. That's what he says. And therefore, I would have felt that then the 25% should also have been including cess and surcharge.
But that isn't going to happen. His promise last budget was 30 to 25, not 33 point whatever to 25. We've discussed this before, so it didn't come through. Our POEM has been deferred. GAR is on schedule for next year. He affirmed and reaffirmed that. And he's introduced, very interestingly, a new digital economy tax, 6% tax on online ad revenue of more than 1 lakh rupees received by non-residents from resident Indians. Your thoughts, Rohan, on the fact that we are on schedule for GAR, which is is fairly controversial. Thankfully, poem has been deferred, but the guidelines have come so late, it had to be deferred.
Yeah. From my perspective, there's a certain sort of trajectory that tax globally is taking. And whether you talk the poem, whether you talk the GAR, whether you talk BEPS implementation, it's all part of one move. And from that perspective, you're saying, yes, the poem had to be deferred.
Yeah.
I don't think you could really say that the GAR is never coming.
Yeah.
And you've had 3 of the action plans implemented, 1, 5 and 13. So I think it's all
BEPS
sort
action
of
plans.
BEPS action
So
plans.
country by country reporting, this
Country
digital
by
economy.
country, that equalization.
That's the digital economy one.
That's
and
right.
which was
And everything to do with your patent income.
okay, fine.
So the situation is, you are seeing a very clear move in that direction. The dates are more or less going to be reconciled. So I think all of what is happening is really an affirmation that we are moving to a more global system, and all of these are essential elements of that.
Okay, fair enough. I want to bring in one more talking point into the mix, Bobby, and that is taxing the rich, the 10% additional tax on dividend income of 10 lakh rupees per annum and more. The Crorepati surcharge increased from 12 to 15%. But on the other hand, he's also done a whole bunch of beneficial things for investment trusts. So if you look at high net worth investors, if you look at rich people, they've got the short end of the stick, maybe fairly so. ARCs, REITs, InvITs, some pass-throughs being offered on those, which would be helpful. So if you were to add this to the direct tax changes that we've discussed so far, what would you say is the shape that this policy is taking?
So, there was, before this budget, there was this big apprehension that this was going to be a Thomas Piketty budget, right? I mean, and that there would be the social equality, inequalities, and all of those kinds of things which the budget would seek to address. And I think that, we've had a precedent of income over a crore of rupees being subject to a higher tax, and so now the surcharge has also been increased from 12% to 15%. So dividends are also going to be taxed. Now, I was just thinking of, at least my familiarity with promoter holding structures, typically there are investment holding companies or investment holding vehicles which sit on top of the main tax rather than through it's like a distribution tax which is non-creditable, etc., versus a withholding tax which would have had a better overall tax effect from a principal's perspective.
Okay. On the front of trusts, Pranav, the fact that ARCs as well as I think REITs and InvITs have got some relief, but AIFs wanted to pass through and they didn't quite get that, so they're disappointed from that point of view?
So I think AIFs, what we are told is that at least the investors were hitherto facing a 10% withholding across the board. We are now told that non-resident investors can get treaty relief. And probably therefore what happens is if you are coming from Mauritius or if you are taxable at a lower rate, the rate in force, including after considering the treaty, applies.
Okay.
And therefore to that extent I think they should also be good.
Okay. So that's broadly direct tax, and I'm sorry I'm racing through this, but there's so much to cover, and I want to get quick comments on everything. Rohan, indirect tax. The most disappointing thing here is we have 2 new cesses, and they keep adding cesses every year, right? We have a Krishi Kalyan cess, 0.5% on all taxable services, so the effective service tax rate now goes up to 15.1. And then we have an infrastructure cess that applies across the board on most cars, from what I can see, at the rate of 1%, 2.5%, and 4%, depending on the size of the car and the fuel that you use, really. A little disappointed with this. What do you make of the introduction of new cesses every time?
So undesirable, because you're just complicating the tax system, whereas the overarching principle is you want to simplify it. And at the other end, there are also a series of cesses he's done away with. Because he says too many people in the fray, too many taxes coming in. So to that extent, the mechanism is disappointing. I think the addition is actually the addition that people were expecting to the service tax, trying to align it with the revenue neutral rate. So from that perspective,
but he's not because he says he hasn't actually increased the rate.
Yeah, so the situation is he has the cesses. What you will effectively pay out, as you now said, 15.1, and if you are in the auto industry, a little more. But basically it's a move to say ultimately the tax cost for indirect taxes will be around a revenue neutral rate. As I said, the mechanism is different, but the rate is moving in the direction of what will be the revenue neutral rate. And I guess most people were relieved. They thought the change would be far larger. to the extent that it is lesser, I think people are relieved.
Yeah, no mention of GST though in this speech. Interestingly,
So,
I don't know. I mean, I'm not trying to read too much into it, but we did see higher rates of taxes, both TDS and excise in some fashion, STT in one case, on a variety of goods, ready-made garments, jewelry, STT on options, clean energy cess on coal. Again, a whole bunch of higher rates on that front. Some make in India relief, customs reduced and excise reduced for some manufacturing in India, and then the abolishment of almost 13 cesses. The reason why I'm listing all this is to try and get a sense of, are we finally converging rates towards GST, not just the service tax rate but everything else, or do you continue to see small tinkering in excise rates, customs rates, just to meet the sort of the immediate near-term requirements?
So on GST, obviously there is not a headline statement, and I think probably advisedly so, because you could make one more promise and if it was not kept, you're again eroding credibility. But three more subtle changes. One is, even if it's through the cesses, the service tax rate sort of did creep up. The second situation he needed was a much larger tax footprint. And although he's done it in a limited way in terms of clothing over a certain price point of 1,000 rupees or in terms of jewelry, that footprint is sort of increasing. The third situation that he needed to go into a GST was a far more credible and robust system of SEMVAT credit, where he's done a lot to actually de-stress the system and actually clean up many of the points of criticism.
Okay.
So while there is not a big headline in terms of GST, very clearly there are more subtle changes which sort of seem to indicate that's where it will go.
Okay.
And from my perspective, while it would not have happened in the budget, I wouldn't be surprised if in the second session of Parliament in this budget session, there is actually a much more definitive announcement.
Okay, so you're saying that the movement is towards GST, even if the speech did not mention GST anywhere at all. Anything that you would have hoped he had done this budget to enable GST that he hasn't done?
So, again, the situation with GST is threefold. The parliamentary process, all of the legislation you will need,
right,
and the transition time for industry to go through, because if you don't have enough time, it will be disastrous.
Right.
So the one thing, and whether he does it now or he does it later, as long as it's credibly done and met, is that all of the legislative pieces which need to unfold, he doesn't really need the participation of states to formulate. He needs their participation to approve. So I think that whole process of formulation and something more coming in, including the model code, which was to have come in last month, I think something in that direction would have sent a much stronger message. Maybe it's around the corner, maybe we're expecting too much, but I think something in the nature of more legislative engagement with the public is required.
Okay, so having discussed direct and indirect taxes, can I sum up at least the conclusion of this segment by saying that in direct taxes, he's taken some steps towards policy simplification, as pointed out in the corporate tax rate, and in indirect taxes, he's made some necessary changes in the process towards GST. Would that be your conclusion? So,
I would agree.
Okay, Bobby, we're on the right path on both fronts?
I think so.
Yeah, Pranav, have we missed anything on direct or indirect that he ought to have done this budget?
I think we'll come to that as we look at the rest of the part, but so far the summary seems to be good.
All right, great. The reason I've raced through all of this is because I've kept the juiciest bit for right after this quick commercial break. When we come back, we'll talk about dispute resolution and reducing litigation in taxation, and we'll talk about the Vodafone and Kane fix, if it is a fix at all. That's on the other side with this tax expert panel. The tax fine print in Budget 2016 with Rohan, Shah, Parikh and Pranav Sayta. Gentlemen, I want to go to what I'm calling the income disclosure scheme because there's no better way to say it. Domestic taxpayers can declare undisclosed income by paying 30% tax plus 7.5% surcharge, 7.5% penalty, that's 45% tax, immunity from prosecution. Not quite an amnesty scheme, but given that the response to the Black Money Act or the attempt to tax overseas assets was so poor, is this one going to work at all, Bobby?
I'm a little skeptical. I don't think that. I'm not very optimistic for the reasons that you identified, and I think that the previous one, which was more successful, had the tax rate capped at 30, and they did collect about 10,000 crores in that. I think 45% is relatively high, and what I think is that the deterrents which they need to establish are not so fully fleshed out and evident. The evidence of that is still out there, right? I mean, in terms of how they will use data analytics and how they will use information gathering and information capture and information analysis to be able to target people or identify potential evasions that are occurring. So, am I, if I was not paying taxes, am I really frightened right now because I can see all the ammunition and the artillery being lined up against me and I better go and comply? I think that that the element of fear is still is still not there.
Okay. Do you agree, Pranav, Rohan? Any disagreement here at all?
I would feel so, that I don't think this is going to be a big success, but one has to wait and see. One, the rate is high. Second, I don't think there's enough deterrent and incentive for someone who's unaccounted wealth to be able to disclose it.
Okay. Let's come to dispute resolution. Let me start with Vodafone and Kane, because that really is the last 5, 7 years, 6 years in this country we've been consumed by that. A one-time scheme of dispute resolution for ongoing cases under retrospective amendment. What is it that they're offering, Vodafone and Kane? And if it's simply just saying no penalty and no interest on the amount that you owe to us, is that really the way to settle these matters at all, given that these are matters in international arbitration?
So Menaka, the situation, that's what they're offering. They're saying that it'll be a one-time settlement, you pay the tax, and we will waive the interest and we'll waive the penalty. Given that the tax demands themselves are humongous, I don't know how much of an incentive it is that, there will be a waiver in terms of interest and penalty. And I think the heart of the issue is, are these taxable at all? So from that perspective, is it going to enthuse Vodafone or Kane? And let me say that, I think we wrongly keep labeling this as Vodafone. There are at least 140 matters which are impacted by this issue.
Right.
And, only focusing on Vodafone I don't think helps. But the one thing which worries me about this is, you are saying that this is the best offer we can make after so many years of wrestling with this issue. At the same time, you are saying no retrospective, this government won't have it. You are saying new cases will go to a panel. But the moment you say at least pay the tax, to me it is, at least indirectly, an endorsement of the position of the former government.
Which is
to say that it's retrospective and the heart of the issue is tax, so pay the tax. Now from that perspective, I think it's a very, very mixed message. Either we should have had no message. I know it's a very difficult issue, but if you have a message, you can't say I'm against this, but hey, let's settle by you paying a few thousand crores. I don't think that is really going to cut it, and I don't think that in any case restores our credibility, which is really the heart of the issue.
Bobby, you agree, disagree?
So I tend to, I agree with that, and it is sort of also, I'm jumping to the next parts of the dispute resolution, but it is also consistent with the thinking seems to be consistent even in the formulation that they have for other dispute resolution provisions. Right?
So 0% penalty in disputes of up to 10 lakhs, 25% of minimum imposable penalty in bigger disputes, right?
But you pay the tax.
You pay the tax.
But you pay the tax, and the issue that we have is that we have very high-pitched assessments. So the tax demand itself is something which I have a big problem with. And if I have a problem with the tax demand, then how does this become a dispute resolution mechanism that is helpful? So unless we are able to alleviate the aggression that is there in the tax administration and the high-pitched assessment syndrome that we've all experienced, this becomes, it's a formulation, but it's I don't know how effective it becomes, because in most cases that go into litigation, there is a dispute about basically how my income has been assessed.
Fair enough.
And so do I really want to pay the tax? Because how is that letting?
So this doesn't solve the problem.
So it doesn't solve the problem. And I think that if there is a dispute because there is an interpretation issue, then you would sort of say that in any negotiation, you want to say that, okay, I'm giving up some, you give up some, and let's sort of compromise.
But they're giving up interest and penalty.
Interest and penalties, that's when the fundamental principle tax itself is in dispute, is not such a relief. Right? So, I think you need to...
So I'll divide this into two parts. The dispute resolution per se, without the indirect transfer or the retrospective amendment and so on, I think it's going to get a muted response. For the simple reason that almost 80% of the litigation that goes finally gets settled in favor of the taxpayer, which means that there's frivolous disallowances, additions, etc. being made.
So why would anybody agree to pay those tax claims or amounts?
25% of the penalty. So that's my problem. And those who will settle will be those who are completely sure of not winning or almost certainly poor cases. So only those will probably go ahead and settle. That's one part of it. On the other part, I have a slightly different view from what Rohan said. I realize that the government has come up with this a little too late about the retrospective amendment and the policy framework around it. But as Rohan says, to leave it as it is would have been worse. At least they have now come up with a position.
No, he said you ought to have left it as it is.
Yeah, so I'm not too sure.
You don't agree with that?
I don't quite agree with that. What I'm saying is, one, they have made a statement again and again and again since they came to power, no more retrospective amendments. But they have been very hazy about what happens to the past.
That's exactly the point he's saying. If you're maintaining status quo on the retrospective moves taken by a previous government, and then on the other hand saying no retrospective.
What I'm therefore trying to say is,
Pranav, sorry to cut you in, is that we are a nation wrestling with this. We are a nation of some exceptional skills, even on legal issues. If at the end of this period, the best I can offer is pay me the tax, is that enough? Yes, it's a complicated issue. Yes, you've done something. The question is it enough, and does it in any way restore your credibility?
So the point that I am making, therefore, is to leave it as it is in the hazy state it was, high-level committee was not good enough.
So this is an improvement.
Some stand should have been taken. Ideally, I would have felt the stand should have been taken that no retrospective tax even for the past.
Yeah, okay, but that's not happened.
We roll it back.
That's not happened.
But if that doesn't happen, this is the next best. At least state your position categorically, clearly, that this is what we stand for.
Okay, one second. Before we continue to argue on this, I want to bring in some of the other indirect taxes, the penalty improvements and service tax arrests issue.
So, when as a nation you say that I am willing, while I am still in an international arbitration, to say pay me only the tax, I'll forego the interest and the penalty. I don't know how they're going to leverage that, but it's always going to be interesting how.
Okay, now that you've had your say on that. Okay, penalty improvements. We've been complaining about this. I think even Hasmukh Adia said a week ago that, one of the big reasons for litigation is very high penalty rates. There seems to be a reduction in some of the penalty rates. So talk me through that and any improvement on the service tax front where we've seen a spate of arrests.
Yeah. So lots of good changes across the board. So you have situations, for example, where the interest in service tax was 30% beyond a year. They brought it back to 15%.
Okay.
24% only if you collect tax and don't pay. They've done likewise in the context of both customs and excise. So that's been a huge positive. On penalties, besides the schemes where you can pay 25%, etc., there have been earlier provisions where, depending upon whether you paid in investigation, pre-show cause, post-order, you already had a set of schemes. Relevant to the arrest, there were 3 or 4 triggers. What they've effectively done now is the amount which was 1 crore and more in terms of the infraction, taken it to 2, which may not be enough. But importantly, the triggers have been only reduced to 1. Which is if you collect tax and don't pay the tax. So to that extent, again, very, very useful. Only one detail which has again slipped in, which is that previously, if there was no suppression, your tax demand could only go back 1 year. Now, in the context of customs and excise, it can go back 2 years, and in service tax, it can go back 30 months. So what that effectively does is, even if you had no fault whatsoever, you suddenly look at a horizon of a 24-month demand or a 30-month demand. But the rest of it is very good and very positive.
All right, I have 1 minute to go before I have to end the show, so you get 20-second wrap-ups each. Pranav, we'll start with you, literally 20 seconds, whether you want to highlight something that was missed in the budget, or praise it, or leave us with a quick takeaway on what this means for tax policy.
I think by and large it's a pragmatic budget given the fiscal room that was available. I would have anticipated much more in terms of simplification and reducing litigation, like ICDS to be deferred and so on. I would have thought the entire issuer committee should have been accepted by and large. I think, for example, the dividend tax of 10% without allowing expenses is a complete unfair deal. In fact, even without the dividend tax of 10%, because dividend has already been economically taxed, one was talking of allowing expenses. So some of these gray areas ought to have been addressed. Otherwise, I was not expecting some big fiscal giveaways. I would have expected clarity on the tax rate reduction for corporates, and these are things I would have expected.
Bobby?
So I'm a little, I have a somewhat more charitable view than Pranav, and
That's
although
nice.
not that Pranav was completely negative, but I just think that if I sort of sit and look at lots of different things which are problems, and the fact that we have a really adversarial and all the problems that ail the tax law and the framework and the administration of it. then I think that this budget at least makes a serious and an earnest attempt at trying to address those.
Okay.
And it, so now whether it's done that effectively enough or not is a matter of debate, and some of it will be known only from
But
experience.
at least they're trying.
But they are trying, and at least so, and therefore I think that at a bigger picture level, that where because a lot of the issues in some of these changes and everything that the government wants to do, there's a credibility issue, and so it's important to have statements made and affirmed, but you also need to show that you're translating those in some fashion into action. And to the extent that there has been that effort to try and do that, and to, we have an adversarial tax regime, we have tax terrorism, we are trying to do something about it, and here is our effort. Now, you might grade it high, low, whatever, but at least it's sort of now supplementing the words,
Okay.
and to that extent, I think it's a good thing.
Rohan, sorry, you have only 10 seconds.
Yeah, so I think it's a commendable effort. Lot of moves in the right direction. I had focus on what's done rather than what's not done. I still continue to feel the one missed opportunity is we should have taken the indirect transfer by the horns and done that, because that's the most erosive of our credibility internationally.
All right, gentlemen, thank you so much. I know how difficult it is to put tax into a 22-minute show. I'll leave you with just one number. I think that the government's looking at a 12% increase in tax revenue in FY17, and that does seem more realistic than some of the previous targets that we've had. If they lower targets, then it could also very well mean that there is not that much pressure out there on tax officers to make outrageous claims, and let's hope then these efforts to reduce tax terrorism along with more realistic targets will mean for a more tax-friendly administration. With that, we'll wrap it up here on Budget 2016, the tax fine print.